On this episode, we're joined by Nick Bennett, who is the Chief Technology and Operations Officer at Castle Trust Bank. So today we're going to discuss their plans for rolling out new digital products and his view on the now, next and future of digital banking technology. So Nick, firstly, thank you for joining us. For those that aren't familiar with Castle Trust, can you give us a bit of background about the bank?
Yeah, so Castle Trust is it's a kind of mixture of two things, really. It's a kind of neobank. Mm-hmm. So we've been a bank for a little under 2 years, combining that with a established and growing sort of lending proposition. Mm-hmm. And Castle Trust combines essentially three propositions. So we have a consumer finance business called Omni, and we lend to pretty much any sector from home improvement loans, retail, medical, which obviously is very relevant at the moment. And we do that through a whole range of different retailers and brokers. We've got about 2,500 retailer relationships. So it's all B2B, and we're lending to those. And obviously at the moment, given the way the market's evolving, that's a really phenomenally strong growth proposition for us. And then we have a property business, which is looking at essentially, it's very specialized. It's not your vanilla high street lending. We're not competing with HSBC or Santander, but we're offering a range of different specialist mortgage products, buy-to-let, holiday-let, bridging, development finance, and so on. And then the other component, now we're a bank, is we've got a range of different savings propositions. So we offer both ISA and non-ISA. So these are the three businesses, and we're going into a really nice growth phase at the moment. And so there's a lot of focus on how do we develop the business, how do we use technology as an enabler to grow those businesses, and yeah, it's a fantastic time to be at Castle Trust.
Sounds exciting stuff. Well, before we sort of dive into that in a bit more depth, what's your personal background?
So I've got sort of varied career. So I started out in consulting. So I was at Accenture and EY, traveled quite a lot, got that out of my system. And I moved into banking. I was part of the team that acquired Abbey National. So I was in the Santander team that acquired Abbey National. And we went on, and I was then part of a team that essentially went through a series of acquisitions and integrations to build out a retail bank from a series of building societies, essentially. And then I moved into the kind of SME and corporate bank at Santander. And that was the point when I got approached to join Tandem. So Tandem is a new digital bank. This is in 2016. And as you recall, there's a wave of excitement around neobanks, digital banks. So I had the opportunity to kind of go in as a COO for Tandem. And I was there for 4.5 years, helping develop and grow that business pretty much from scratch. This was kind of like at the point we got the banking license all the way through a series of acquisitions we did. And also kind of, we developed out some distinctive propositions, particularly around credit, which is something we firmly believe was going to be the sweet spot for neobanks. And it's from there, I moved into Castle Trust in the last year. Again, the same reason. I think I've worked in lots of different businesses, but I realized that I much prefer to be in a growth-focused business where there's something that you're developing, you're growing, you've got an opportunity to really innovate, to really kind of attack the market in a very different way to a bigger incumbent, like arguably Santander, but certainly the bigger banks, where there is that opportunity, but tends to be constrained by legacy issues, whether that's the proposition, the platform, or the culture. And so I much prefer being in that growth dynamic that you find at Castle Trust.
Sounds good. It must have been quite a Santander to Tandem, quite I guess a culture shock and a different journey.
I mean, it's on every level, right? Because part of it's like you as a leader, you have to kind of almost change your learning and your leadership style. So a lot of the kind of corporate sort of personas and sort of processes, you just don't have any of that. So you have to think about that in a very different way. But also I think with that, I found you develop a much more authentic leadership style. And you have to be much more personal in terms of how you lead teams and develop teams. There's much less of the structure that goes with the corporate, which can be good, can be bad, but I really enjoyed that. And then the other element was just the fact that there's no institutional memory. There's nothing, most of the time you're encountering an issue or problem for the first time. And that can be fun. It's, most of us that build businesses love that experience, but it can be quite daunting when pretty much every time you're encountering a problem, you're having to attack it for the first time.
And I guess coming to Castle Trust now, you came at quite an interesting time. I think the business has been around for upwards of a decade, in a slightly different form, got its banking license reasonably recently. Quite almost between the two, I guess, in a sense. So in terms of the ambitions for the next sort of phase of Castle Trust digital proposition, really, can you share any of those ambitions and some of that vision?
Yeah. So I think our maybe if I talk a little bit about how we see differentiation in the market, and then what are we going to do from a product point of view. So I think from a differentiation perspective, obviously the way we differentiate is very much conditioned by the markets and the segments we're in. So I think for us, it's about, we want to continue to offer real great value for our customers. That's really important. We provide real value. So examples of that within Omni, within our consumer funds business, 70% of all our lending is interest-free.
Okay.
So it's phenomenal value for our consumers and our customers. Same thing on savings. We offer top of rate savings products. So I think offering value, not just price, but offering value is really important. I think the second is building out high class digital journeys. So we don't have any branches. We don't intend to have any branches. For us, a lot of what we're going to do is online, digital. So having experiences that are seamless, very slick, very easy to kind of go through from a customer point of view is really, really key. And also that allows us to scale in a way that doesn't imply lots of cost, lots of headcount. And then the third dimension is, and this is still very important, is like offering high class, high quality customer service. Something that, actually, funnily enough, banks historically were perceived to be really bad at. I think increasingly banks are probably one of the few sectors that still have a focus on good customer service. If you think about the last 2 or 3 years of customer service, it's quite hard to get hold of anyone on the phone, right? If you whereas a bank, they still invest in this. I think for us, it's about having really good retail and broker experiences. Some of our relationships are B2B, they are intermediary led. Yeah. But also we want to make sure that we do make it easy for consumers to work with us. We give them choice so they can dictate, but do it in a way that still offers high quality service. And so the product focus is really attacking each one of those. We want to make sure that our products and the platform development has placed each one of those 3 different priorities that we have.
Interesting. So on the Omni point, actually, that kind of retail finance sector has been seeing a huge explosion of, sort of interest and innovation in recent years. Is there anything you can share around kind of areas you think that Omni would like to or can innovate in? Yeah,
so there's a lot. I mean, I think we'll come on to talk about trends in a minute. Also, there's a lot of excitement at the moment around things like embedded finance, which is like, essentially, non-banks offering banking services. And I think to some extent we're facilitating that from a lending point of view, and we have been for a little while. I think we're playing into like a big shift in terms of consumer behavior and attitude around credit. So I think a lot of consumers, particularly like millennials and a kind of younger demographic, they don't like using credit cards. They have a different attitude towards credit in general. And so for them, the kind of accessing finance at the point of need when you're making a purchase is the kind of logical way to look at credit. So it's kind of very specific. And that's essentially what Omni is doing. And what we're doing is we're partnering with pretty much every sector. So we're not sector specific. It's not just about home improvement, but also we're playing into lots of themes that are really important for society. So home improvement, in particular, is about supporting people greening their house. Like is very much addressing some of the climate change challenges we have, and that's a massive growth area. And then the other thing we're doing is we're really investing in making sure we've got like high quality customer experiences. So about 65-70% of our decisioning is automated. So consumers, when they apply for us, they're getting a decision straight away, which is phenomenally good, right? Compared to the experience you'd have had 3 or 4 years ago.
Yes. So I guess a lot of that technology focus is also almost how do you become easy to integrate with, and how can you sort of make that as pain-free experience as possible?
Correct, because you've got a lot of what we do is through, as you said, is through the retailers. So we focus on not just the end consumer, but also how does the retailer on board with us? Obviously, a lot of it's through APIs. It's through kind of very seamless, very simple integrations. But with that, we also allow them essentially to onboard with us within days. So most retailers, particularly when you're adding retailers almost every week, you need to have that slick, seamless, very simple experience. But also through that, going back to the embedded finance point, you're opening up a whole new economic model for those retailers, because now they can start to offer finance that quite often is the clincher in terms of being able to convert an interested customer into a sale. And for them, there's an element of subsidy there, but actually ultimately it works for them in terms of economics. So that is quite a powerful proposition for them.
So from a technology point of view, do you build your own products internally? Are you, those core platforms?
So we do a mixture of buy and build. So on the consumer finance, we feel that there's a strong element of differentiation. So that's where we do actually build our own product. And we have done for quite a while. And that's where we continue to look at where we can, part of it's about having the right features and the right kind of proposition, but it's also about having real product velocity, real agility. And so that's why we really like the idea of having our own platform, our own front end, that we can engineer very quickly to adapt to those changes in market. In other parts of our business, let's take property, for example, we're quite happy to do more of a buy strategy where we go out. There's a lot of, talking about fintech trends, there's a lot of great products in the market now that we can purchase, good value, offer, some of it is quite commoditized. So they really offer a leading market experience, but at a sort of a market where we don't really have any need or intention to build our own platform. So we're kind of looking at the combination of the two, which again, we're Cost Trust is a relatively small business. We're 215 employees. We've got scarce resources. It's important we invest our resources in the right thing. And where we want to kind of partner, look at the good partners, making sure there's good cultural fit there, and then bringing them in to kind of help enable where we need it to.
Yes. And there's always that line between sort of buying and building. There's a complicated sort of decision that kind of informs that. I think the quite exciting thing, for us now, building digital products is that the bigger fintech revolution and generally the pace of technology change means that, if you think about AML checks or identity checks or other ancillary services, by having built your own platform, I guess it's probably a bit easier to customize and build that proposition, plugging in those different components. So there's definitely an advantage there.
Definitely.
So actually, while I've got you, you're probably a good person to talk about the kind of wider sort of neobank and fintech sort of trends, having sort of been sort of involved in some of that, the early wave of the a neobank. So I guess looking back, we're a couple of years into that journey now as a market. What are some of the key lessons you think we could learn from some of the successes and also some of the failures so far?
So I think I would differentiate between like the fintech and neobanks. So I think fintech has been like, for me, like overwhelmingly positive because it's done a couple of things. One is it's opened up like what was to some extent a fairly closed sort of financial ecosystem where you've now got like a lot of non-bank products, offering their vendors almost offering any kind of range of product or service you can think of from a financial services perspective. That whole kind of ecosystem is developed pretty much out of scratch. And you've seen a wave of vendors and partners coming into that. And it's kind of it's done two things. One is provided a lot of high quality products, but also I think created a kind of a sort of attitude of partnership that was maybe lacking 5 years ago. So I think that dynamic, and frankly also I think bringing in a lot of value for money where actually like businesses like ours can really find great products at great price, and they can do it in a way that maybe 5 years ago they would have spent 5x what they're spending now. So I think that's opened up a kind of enormous range of opportunities for us as businesses and banks, and I think ultimately for the consumer because it means we're going to provide better services. I think for neobanking, it's a bit more of a mixed picture because I think what we're now, we're probably into, I think the Bank of England said last year they only authorised four or five banks. I think the wave is starting to decline a bit, but I think what's true is most of the neobanks that came in the first wave didn't have a clear enough picture of how they were going to monetize their growth. And it kind of depended. So like in the case of Tandem, we had a particular focus on credit because we believe that whilst you're a neobank and you're growing from a customer perspective, you need to have a route to monetization. And ultimately, we believe that one of the reasons for being a bank is you could use your balance sheet. So essentially, you're lending. Other banks, let's take Monzo, didn't have that philosophy. So they were able to prove out like more of a kind of VC model of just grow, lots of customers. And that they did very, very well. And actually, they proved out the value in the way that Revolut did as well, the value of virality. Because most of their early growth was through referrals. It's through viral growth. They didn't have hardly any marketing at all. But what they struggled with is the sort of monetization. And I think what we're going into, and I think the last couple of years, what we've been through with kind of the COVID and so on, is actually a kind of a realization that we need to have like stronger economics. And I think most of the neobanks now are shifting their business model towards more of a kind of a credit, more of a lending focus. And you'll see that in the market. So I think now you're either a lender and or you're looking at niches like payments. And I think I think that's changed. I think the first wave was, I think, mainly around trying to reinvent banking. And I can recall, you probably can as well, there were lots of debates about what that means, and it was kind of intersected with new technologies and open banking and all that, and it kind of got conflated into something that was arguably quite significantly overstated. I think there's almost like a kind of leveling down where there's a lot of good things that have come out of that. But ultimately, they're in a wave now where they need to kind of mature, but also start to kind of solidify the growth and the kind of profitability element of their business model.
Yes. I guess also there's a little bit of a focus on technology and excitement. You talk about stuff like open banking. I mean, that was interesting because that was driven by the regulators. And sometimes kind of some cool features, sometimes gimmicky features, but they're kind of, it wasn't necessarily clear like what's truly really beneficial for the user. What is this truly different from a kind of incumbent bank? I think that's the thing that, if you're that type of bank but don't have the lending arm, then you're kind of half a bank in a sense, aren't you? It's been interesting to see some of the sort of newer banks buying, for example, Starling buying fleet mortgages recently, those types of deals building out. I think there's probably recognition of that trend. So if we but I think, not to sort of see negative about it, from an experience point of view, I think that competition has certainly made the incumbent banks kind of sharpen their tools. And I won't name the bank, but I'm banked with an incumbent bank, and you can see the pace of their product development around their app. I think a lot of development, a few years ago was around internally focused, getting systems to the point of view where up to speed to the point where you could start to innovate on a product level. And I think they're starting to move at a bit more of a pace, which has been nice to see. So competition is good.
Yeah, I think the one thing that I still struggle with, which is like the incumbent banks still don't see digital as a kind of a business in its own right. It's still a channel. Mm-hmm. So they'll, like you probably got your mobile app and you're servicing on that.
Yeah,
but you're not really like you haven't been onboarded through that.
No.
But you look at like digital businesses or like tech businesses, and really everything is about digital from the point of, really from marketing all the way through to onboarding, all the way through to conversion. And that was the other change that came through neobanks, is actually they thought about the kind of concept of a digital business where everything from sourcing the customer through onboarding, through conversion was all through that frame of reference. And that's still a difference, I think. But you're right. I mean, I think the kind of, again, you could overstate it, but I think you have seen is a complete shift in mentality around digital, to an extent around customer, because I think these new banks were very customer focused. I think that's all to the good. Yes.
And if we sort of think more broadly around technology, so along with this excitement around fintechs and neobanks, there's been a whole wave of new technology developments in recent years. And I think it'd be interesting to your thoughts on, as new technologies emerge, you think about the metaverse, which is kind of on trend at the moment. How do you sort of evaluate and judge when and how you adopt those technologies?
It's a great question. So I think you made a good point in relation to open banking, right? There's a lot of froth. And I think we try and pass it into two things. So one is like where there's very immature technologies where there's a lot of froth, there's a lot of kind of like, well, this is a revolution, but is it really a revolution? And I think to an extent that was true of open banking, albeit open banking wasn't really a technology, but it was a kind of a concept they were talking about. But it wasn't really evident where the use cases was in the very early phase. So kind of, for some of those, we have a view which is, we'll kind of explore, we'll look to experiment, we might do a POC. But what we really want to look for is where those technologies have obvious use cases. And quite often, I think we spend too much time, and let's take AI as another example, we spend too much time just talking about the underlying technology rather than thinking about, well, what's the application? So in the case of open banking, we're trying to look at like, where's the application for our business? I think for open banking, a lot of it is around onboarding and decisioning.
Yeah.
So we can actually start to have slicker onboarding experiences where maybe you can, through the open banking connections, you can start to facilitate, things like KYC checks in a way that doesn't require you to use a KYC bureau. But on the credit side, if many millennials don't have a credit history. So using open banking, essentially you can start to provide slicker decisioning, potentially give them a better rate than they would otherwise get.
Yeah.
So that's where you can kind of flip it from just being about the technology to actually, where's the use case? And quite often you're stitching together technology with data, with good UX, UI. So it's usually a combination of things. I think for AI, again, we've been doing some POCs on that. I think I'm really excited by kind of AI as a concept, because I think like inherently banks have a ton of data. So you would expect banks to be really good at managing data.
Yeah.
And for some reason, outside credit, maybe we're not, we haven't been. But I think inherently, if you think about the evolution of banks' models and their capability, that's the obvious area of focus. So we've spent a lot of time on building out a completely new cloud data platform that has the capability to start to leverage machine learning, AI. And to an extent, that's an example where actually you can deploy the technology without necessarily having obvious use cases.
Yes.
Because what the other thing is, you can actually create the ability to adapt and evolve and just use the test and learn that you do every day just to better refine and think about where is the utility, where's the value. And then the thing I'm excited about is embedded finance, which we talked about a little bit earlier. So that's where I think you are seeing that combination of peer-to-peer, kind of like banking as a service, whatever you want to call it, where you've created again combinations of capability that can provide really evident value for consumers. And we've been doing it from a lending point of view, but you're seeing other examples where they're deploying it from a bank or current account perspective, where it's opening up both for retailers and for consumers access to services they would otherwise not have.
Yes.
And actually contextualize. I think the other thing that banks don't do very well is they don't offer services in context. So like most consumers don't think about, hey, I want a credit card or a loan today. this is the kind of Klarna model. They think about, well, actually, I'm buying a service. I need access to finance.
Yeah.
Or I'm getting to the end of the month and I've got 5 days and I need to consume. I've got to get to the end of the month and not have to get slammed on an expensive loan, right?
Yeah.
So that's the kind of offering it in context around a particular need or service is the kind of the other thing I think you can do well, which is where embedded finance really helps.
And do you think that there's also been talk around this concept of kind of really personalised finance, thinking about how AI and plugging in open banking, plugging in these different things could enable that kind of hyper-personalised underwriting, for example, etc. And even how that could change the model of, for example, mortgage products, for example. We wouldn't necessarily be choosing from a list of products, but it could be something that's more sort of actually bespoke to your risk. Even thinking about the data sets you have, not just, all the way from a servicing perspective, plugging in that data to really enrich that decision. Do you think that has merit? Do you think that is a trend?
Completely. I think, and I think that's the example where you're taking combinations of things and stitching it into like a service or a concept, right? So because there you're taking the fact you have the data or the understanding of the customer, which is, and there needs to be an element of consent here as well, right? Which is actually the customers are happy to share their data.
Yeah.
Which I think is gradually improving. I think when you looked at open banking, again, taking open banking, one of the big challenges early on was like, customers were really understandably quite concerned about the risks around fraud, around...
Well, even the positioning, but we did some testing around that, and like open and banking, like intuitively aren't words that necessarily make people feel super comfortable. So I think there's a branding element.
Correct. Yeah. So I think some people now are calling it like universal access or something.
Yes.
But I think that was partly going on, but I think taking the kind of the data that goes with that and then stitching that into something around like actually, take an example we looked at where you can essentially create like auto savings. And that's really a combination of open banking with AI and good UX. And essentially is personalized because it's based on the individual's savings preferences. So they can dictate how much they want to save every week. They can dictate whether they want to do roundups. Yeah. They can dictate, do they want to do some sweeps? And they can dictate the degree to which they have a safe sort of, what we called safe to save concept, so that actually they could allow for a buffer so they didn't run into overdrafts. Okay. And that became something where it almost became like a kind of a seamless savings service where consumers didn't even think about it because it was just happening in the background and the bank was doing the work and then they were just building up a savings pot. And I think that's like, a really cool concept where consumers look at that and go, well, in our society, we're hardwired to spend. We're not good at saving. This is something that banks can solve by offering these types of services where as long as you're prepared to link your accounts and you're prepared to share some of your data, there's obvious value. It feels like a kind of a great consumer service that's offering, this attacking and addressing a particular need that we have.
I think also the exciting thing, if we think about AI, for example, going back 10 years, what you can achieve now compared to 10 years ago, at what cost you can deliver it. I mean, there's been, by Google and Microsoft offering effectively, on a SaaS basis via Azure, etc., access to these services means you can build POCs, means you can sort of dip your toe in the water, I guess, to a certain degree, and then prove use cases without necessarily huge investments you had before. And that's where these combinations of different things can sort of have serendipitous outcomes, I guess. So we talked about AI, talked about embedded finance. Sounds like Cast Trust aren't going to open a branch in the metaverse quite yet then. So
No, I get asked this a bit, but we've made a particular choice, which is we're going to be digital, we're going to be online. Yeah. We want to offer choice, so it's not about necessarily restricting choice. So we want to broaden the kind of channels we operate in. We want to give customers the ability to, if they want to use online, they want to use chat. If they want to phone us up, absolutely they can. Yes. But really, what we're trying to do is just think about what are the problems we're trying to solve in terms of the customer service rather than building a branch.
I think that's a good focus you've got. Yeah. Are there any other technologies or trends that you think, in the world of digital banking that particularly excite you or interest you this year?
Yeah, I think there's going to still be a little bit of innovation around like around the kind of the service dimension. So we've been looking at a number of different POCs around service automation. So I think, we talk a lot about chatbots and all that kind of stuff, but I think what we're trying to look at is where we can create kind of essentially conversational UI, conversational service where, again, it comes back to this data point. You need to have enough data to be able to make it sort of contextualized. It needs to be personalized, but we're looking at a number of different areas where we can create out distinctive service experiences where you don't necessarily have to talk to a human. You can actually have, essentially that kind of conversational element through a kind of online channel or through a chat channel.
Interesting. Yeah, I mean, we've done a fair amount of work in that market in recent years, and I think it's a hard one to really nail and get right, because and there's also particular use cases that work really well, and the key thing is around testing with users and sort of, I guess demographic differences. You see that people are being open to using sort of more automated conversational experiences, and also we found some kind of non-obvious, quite niche use cases, particularly around things like broker lending criteria, for example. Lots of queries coming through to call centres that don't necessarily need a human to answer, that aren't perhaps immediately obvious if you think about use of chatbots, but it's those particular use cases that can make a massive difference operationally. I know with your operations hat on, that probably interests you quite a lot.
Yeah, completely. And actually, so the two things we've been looking at, one is exactly that, where you've got like, particularly an intermediary model, where you've got those types of questions where you can actually, there's a lot of reference, a lot of data points, and you can actually build something that's very, it's not, doesn't have to be particularly complex, but actually addresses that need. The other one is we're looking at just where we've got high frequency interactions, like in consumer finance and Omni, is quite often around payments. And looking at how do we provide sort of slicker interactions there.
So simple servicing activities.
Correct. And so you avoid that situation where consumers don't make their payments on time, and then you're into sort of the arrears and the kind of collection cycle. So that's an obvious kind of, I don't know if you want to call it a moment of truth, but it's an obvious area where you could really solve problems and do it in a way where you don't have to throw all of that to a human, and the consumer still feels like they're getting to a degree, a fairly personalised service because it's addressing the particular problem they have. So I think, yeah, you're right. I think with this particular kind of, and we've been looking at like, RPA as well, but I mean, some of it, you kind of need to have a compelling business case. I think to some extent, like, particularly on robotic process automation, it feels like you're kind of experimenting for the sake of it. So we've been trying to be quite precise about where we deploy these things, because you could end up creating lots of POCs without an obvious
Yes. So it sounds like you've had a busy first year or so. Lots going on. What's on the horizon for Castle Trust the rest of the year? And any of these things that we'll see sort of coming to market?
Yeah, so we're doing this kind of two big areas of focus for the moment. One is we're in line with the growth we're doing on the property business. We're about to embark on a wholesale replatforming.
Okay.
So that's about creating essentially a new origination platform for our brokers. Okay. Which will, going back to the theme earlier, just provide a nice slick onboarding experience, but provide a lot more automation around pricing, around decisioning, around document management, which obviously is critical within a mortgage sort of product. Yeah. And ally that with actually some self-service capability as well. So particularly for our end consumer, they can start to look at things like redemption statements. They can start to see for those critical moments, not for everything, but for those critical moments, they've got that kind of that online experience that will just kind of help provide better quality experience. Yeah. And underpinning that, we're just essentially going through a kind of complete revamp of all of our front end and back end mortgage platforms for both our sales and underwriting teams and for our servicing teams. Okay. So that's a kind of multi-year significant investment, in that whole kind of property business. Yeah. At the same time, we're looking on the Omni side at like, how do we continue to improve the retail experience? So we're looking at, sort of the next version, the next kind of generation of APIs that we're developing for our retailers to make sure we remain competitive, and we keep focusing on the onboarding experience there. And in the background, the other thing we're doing is, as we grow, we essentially want to create like a kind of what we're calling like a one bank platform. Okay. Which is like an underlying, obviously all based in the cloud, but an underlying capability that has a single view of data, a single view of our infrastructure that's very scalable, very adaptive, allows us to innovate, allows us to kind of, as we talked about, incorporate new technologies, plug and play in terms of any SaaS integrations we have as we start to evolve the business. And potentially, if we're looking at M&A, it allows us to incorporate those portfolios or those businesses in a much more agile, much more flexible way. So whilst we have these different businesses, these different segments, I think from a technology point of view, we want to make sure we've got kind of a spine, if you like, that allows us to adapt and scale and does it in a way that's cost effective. And to your point earlier, Mark, we're trying to exploit these technologies because the explosion of cheap computing power, data, AI, all of these things, the kind of the API banking concepts, these are all things that we want to embrace, do it in a way that's appropriate for Castle Trust, but allow us to grow and scale and be innovative. So it's going to be another busy year ahead, I think.
So you've cancelled a holiday this year then? So
yeah, not quite, but I've got a few holidays from last year I need to fulfill this year. But it's going to be a good year ahead.
Sounds good. Well, it's been fascinating to chat and find out a bit more about yourself and the background. I look forward to seeing the developments over the coming years.
Thanks, Mark.
Yeah.
Thanks for having me.
Pleasure. And thanks to our audience for listening.